Good morning, everyone. Hey, this is Rick Kaufman with LMA Trading, like-minded adults, right? Yeah. All right. Hey, it is Thursday. Thursday after our long weekend, and the drop in the market continues here this morning. Um, Yesterday at the close, it looked like we were going to hammer out a bottom and possibly push up a little bit higher, but the markets have something else in mind, and everything here looks kind of identical. I mean, the YM and the Russell kind of look the same here, and the S&P and the Nasdaq look to be, the ones pushing back. And we're gonna look at this, and so you might be asking yourself the question: do I short here or do I not? Um, we'll kind of look at that question, and what do we do about, how to how to, or when should I short the market? Well, the market is very, very bullish, and so even the structure is still bullish, and the only bearish part of the market is probably the Russell on the most part, but we're going to get into that. So before we do, we got to do a little bit of our housekeeping here, and I have to tell you that I'm not a financial advisor. I don't give financial advice, and I'm not a financial planner. So with that being said, I trade my own money, and so I can lose my own money. This has been kind of a little bit of a losing week for me. Been trying to play the markets, and again, emotions have a tendency to rule the day, and so it has gotten me. So when you're trading, you trade your own money, and stocks and options have risk, especially in a market like we're in today, and this week. What do you do? Which way do you go? It seems like, you're trying to play the long side, and everything kind of goes up, and then it comes right back and rips in your face. So, where do you go? What do you do? So, I journal my trades, and it all starts with pre-market. Pre-market helps me, and I do these videos as part of my trade journal. I do these videos as part of my trading plan, and this is to help me get my head wrapped around the market first thing in the morning. Usually around I get up around 6 o'clock in the morning. I start looking at, I watch CNBC. Take a look at the news, but I do not let the news control my, thinking, is from that standpoint. But sometimes when I get up and I see the markets are red, and there's blood on the markets, and we got red candles, it's hard not sometimes to even get emotional before I even open up my charts. And that is probably the biggest part of, what we do as traders, is what I do as traders is, you know we're trying to pull money out of the markets. We're trying to, maybe you're a part-time trader and just trying to hold on to your money. You're a full-time trader trying to carve out a living, and this could be very, very difficult. It is no different than any other business. I've been in business for years, and going out and trying to make money, either selling this or selling that, or buying this and trading that. There's a lot of similarities in all these things, and emotions can play a key into this. But the one thing that I have here in the stock market that I didn't have in, say, in business, are indicators that kind of help me, you know decipher what the marketplace is, and how to play the marketplace. On what side of the fence should I be on? And at this point in time, it's a tough decision to whether or not to short the markets, and or short stocks, things like that. But you've got to, here's my one tip: that you have to play the trend. If it's an uptrend, you have to play the long side. Getting short in a strong bullish market can just rip your face off, especially if you don't set the trade up right. I'm not going to go into about how to set a trade up, how to short the market, how to do those type of things. It's just a question of where do I short, when do I short, when do I go long. These are some of the things that I'm going to look at here. So let's take a look at let's jump into our chart and look at the Dow, the mini Dow. The on the weekly chart, as you can see here, we'd like to see a pullback here, come back down to the 21, and this will help us to reestablish on our long-term chart. We are in a long-term, we've been in a weekly squeeze now for almost 6 weeks. For the better part of 6 weeks, we have a sell signal pointing to the downside. We have increasing volume on the sell candles here on the weekly chart, and we have a lot of red on our charts. So the last 4 days, the bears have been in control of what we've been seeing. We've got some of these candles that would indicate very bearish signals and bearish markets. Now we have on the Dow, on the daily chart, we have broke this level of resistance here. We closed below it. Actually, the last 2 days we've closed below the 21, and it looks like if the Dow does not respond in kind today, it looks like we're going to close below the 21 the third day. We are in a daily squeeze with decreasing momentum. The sell signal fired a few days ago on the RAF, so the Dow is heading lower. How low? Probably on this daily chart, we're probably going to get somewhere between the 1 and 2 ATR before we probably, this puts in a bounce. This could be it. I mean, if we really have a tight day today, and we don't push much lower and don't close below this 1 ATR, there's a good chance, based on other bounces, when we look at this here, we compare these candles. If we could pound out a candle that looks similar to this here, then we're going to go higher. Again, the 1 ATR here, the -1 ATR, it acts as a kind of a resistance, but that gives here. But here's one that failed the 1 ATR, and we went down to the 3 ATR, closed below that, and giving us these signals here. So so somewhere between the 1 and 2 ATR, I think we would be looking for this to bottom out. When we look at this on from a percentage, that's only just a little over a 2% drop. So in the course of things, totally normal in the market, nothing really to be too worried about, just 2%. So there's probably some more of this to come, most likely. So let's take a look at the Russell. The Russell is the one that I would say probably on the long-term chart, we're in this tight wedge here between the 1 ATR and the -1 ATR. And probably we are at a place here that, I'm going to probably look at, jumping in here either with a call credit spread or a put debit spread, and to probably put a position on this to the downside. We've got active signals here. We've got decreasing momentum on the squeeze. And on the daily chart, we close below the 21. And then on our weekly chart, we've been in a squeeze for a few months here. And again, looks like we could be firing to the downside on the weekly chart to push lower to test these levels of support, 2164, or even down to 20, but roughly 2100. So on these levels, so this, this is kind of what I look for in a short. I mean, I use my indicators, the ADX, and I look for, do we have positive or negative stacked EMAs? We have positive stacked EMAs. So from that standpoint, still bullish. The trend here has not changed from anything that would be neutral or negative. So this trend could, this could catch support right here at the daily 50, and boom, it could turn around and rip right in my face. But tomorrow or the next day, right now, it's an any person's guess situation in one like this. So, it's like, um, I get caught up in this too. It's not so much a FOMO. I guess you could call it FOMO, fear of missing out, but it's, when you're trying to put a play on, and get in the game and want to get a base hit, and you're trying to figure out where do I get my base hit? Who's pitching to me, and where do I, how many times at bat am I going to get at here today? And right now, it's, boy, I tell you what, it has me guessing. It has me guessing, but this right here would probably be my most likely one to look at a short on if I was to do that. Let's take a look at, before we jump into anything else, let's take a look at the VIX. And the VIX is popping up here again. It's pulling back a little bit, but it's popped up here. It's trying to get above this 20 level here, and this is a key level of volatility. So, it looks to be, we're pushing higher. So the VIX, we've got volatility creeping into the market, and so if this continues here, the VIX could be a potential play. Uh, Thinking that maybe, this is not necessarily the pullback that we're looking for. Maybe the pullback we're looking for is going to come later in September, or maybe into October. And that might be the one that, we want to capitalize on. So, on the long-term chart, our calendar channels are tightening up, and so it very well could be, the way these lines are pointing, they're, in my opinion, when I look at this, they, this 3 ATR here is pointing up. This one's kind of not necessarily pointing down, but it is down a little bit, but it's beginning to flare up, as you see over here on the daily chart, how this three ATR is laying flat. This one here is pointing up a little bit. This one's pointing up, and then this is up, up, and up. So this would lead me to believe that there's less resistance going up. There's more resistance to the downside, possibly. So that means the support is raising here, giving support to the VIX to the high side. So that might lead me to believe, okay, if I want to play, the S&Ps, if I want to play the SPX, maybe I play the SPX to the downside, but when I look at these candles, even though the bears are in control on these daily candles here, they have pretty good sized bottom widths. I was, when the market closed last night, I saw this candle, this kind of hammer candle. I suspected that the markets would probably catch a bounce here. It pulled close to the 21, and that's what it has done before in the past. It's this morning in pre-market, it about just touched 21. It's pulling back up again. So this market, people are trying to buy the dip. The buyers are stepping in from time to time, and they're trying to buy this dip. The only problem is there is a lot of pressure on the market. The markets are overextended. On our long-term weekly chart, we've got more room to the downside than we do the upside. And so this market looks like it's going to probably drop and pull back. We haven't got a big pullback. Again, when we look at this on our chart from a percentage standpoint, when we look at this here, it's only not even 1.5% pullback on the market. It's 1.41% from the high to the low as of today. So again, nothing really to look at this and say, hey, this is a crash. This is, this is the a 2 to 3% pullback is totally normal. When we look at this this pullback here, this one here is just 2.36%. So again, is nothing, we got another percent to go just to match this pullback right here. So, do you short this, or do you play to the long side? Boy, I tell you what, this is, if we would know exactly what the market was going to do, we'd all be rich, right? we wouldn't we wouldn't be sitting here listening to me ramble about my pre-market prep and whether or not to short the market. Um, so, but you know, I've been putting hedges on, and hedges sometimes work, sometimes they don't. You just have to kind of play that by ear. But you could always, another way to look at shorting the markets is if you have a long position. Let's say you have a long on. On in the semiconductors. So let's say you have a long on uh, uh, AMD. Okay, you might go and put a short on MU or something like that, where you have a long on one, and then on the opposite side you have another semiconductor where you go short as a hedge and kind of playing one off the other. That might be one option, but again, I typically look at, if I want to hedge something, I'm going to hedge. I'm going to hedge on a part of the market where I think my probability is best to put a hedge on and play the market to the downside to protect for some protection or insurance against my long positions. Either that, or I close out my long positions and I take what little profits or what losses I have. I lock in those gains or lock in those losses and move into cash and sit and wait. That would be the other option because cash is a position. So that's, you know, um, or you take small risk, maybe risk 1-2% of the account, and you get say, hey, if I get in here, I lose $100. I'm risking $100 to make 500. Maybe it's and look at it as kind of like a lotto trade. In other words, I'm going to slap $100 down on the number 4 horse to win. For $100 to win, if the number 4 horse does not win, I lose my $100. That might be another way to play the markets. Let's jump into the Qs. The Qs probably are the ones that, if tech can get going, the Qs are the ones that are probably going to carry the market forward. But at the same time, the Qs have not pulled back much at all. We may feel like it has, but when we look at the low, this right here is the low candle, and so in 2 days, it's only pulled back 1.18% to the low. And so, basically what I would like to see is this to pull back to the 21, and get there. But, we're really just trading in this extremely tight range right here for the past week and a half, of say 15.5 up to 15.7. And so about a 300-point range. And so, if we break this level right here, the 1 ATR, then we're going to the mean. We're going to the 21. That's that would be my guess. And because the next level support level is right around 15.4, so which puts us close to the mean, puts us close to the 21. So that's what I'm looking at here today. So question, do I short this market? I can't tell you what to do. I mean, you trade your own money, you put your own money at risk. I'm looking at this and trying to figure out what I'm going to do. The 2 plays I'm looking at is, if I do something, it'd be very, very short term, and I would probably put something on the S&Ps, maybe take a call credit spread or something, or maybe make a small bet, on tomorrow's expiration, possibly, that, if the markets are going to go higher or lower, and make a small bet and play that and figure, if I lose it, I lose it. Or, I could be right and be the hero of the day. The Russell would be one I'd be looking at. Might put something on the Qs. I think the Qs have the most to lose. So, but I would be paying attention to the FANG stocks, to the Googles, to the Amazons, to the Apples of the world, Facebook, Netflix. I'd be really watching these. I'd also be watching, positions such as, the financials, like XLF. I'd be checking out these indexes like the XLFs, the XLUs, the XL, Ks, things like that, and looking at these and determine what are the financials going to do. They've been pulling back here, and so we might be looking at some plays on the financials, but I want to find something that's in line with the markets, that's something in line with the sector that we're looking at. How's the sector playing? If the sector is extremely bullish, then we want to play that. We do not want to short that. If the sector is bearish, then we might go and short say a Goldman Sachs if the financial sector is pulling back. But again, those I think are not high probability trades. Those I think carry more risk than the potential reward. The reward could be huge if you're right, but I look for high probability trades. That's the purpose of my pre-market prep. So with that being said, guys, happy Thursday to you. Have a great day. Make it a great day. Be safe. Click the like button, thumbs up, all those good things. Hopefully you glean something useful here. But again, this is a problem we're all faced with every day. How do I trade today? I'll worry about tomorrow. So see you guys later.